and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we are seeing some amount of red on the broader market screen. So we have the mid-cap index, which is down around 0.6%. The advanced decline ratio, which is on the declining side, and there's been no sort of recovery which has taken place in that ratio as we've through the day. So currently around 1,500 stocks advancing to around 2,700 stocks declining on the Bombay Stock Exchange. The Bank Nifty is the real star for today, so it's up around 0.7% at this point in time, going from strength to strength. And we have the Nifty, which is just about consolidating with a little bit of a positive bias, so up around 40 odd points currently for the Nifty. We have the sensex, which is up over 200 odd points. Well, it's turning out to be a day where specific stocks continue to be in focus. HUL is your top gain on the Nifty. It's up around 3 odd percent. ICICI Bank is giving strength to the Bank Nifty, so that's up around 2 odd percent. And we have stocks such as ITC, which are doing well as well. So FMCG, banks, all of these stocks are managing to see some amount of uptrend, along with IT stocks such as Infosys also. But joining us this afternoon, we have Shahina Mukadam, independent market expert, and Rajat Bose of rajatbose.com to answer all of your queries. Shahina joins in on the fundamentals and Rajat on the technicals. Afternoon, Shahina, as well as Rajat. Well, Rajat, let's kick off the show with you. It's turning out to be a day where the Bank Nifty is really shining. So what would your approach be? Rajat, is my voice reaching you? Okay. All right.
The voice is breaking. Anyway, you were asking about Bank Nifty and Nifty.
Yes.
See, as far as the indices are concerned, I mean, they are moving into the red and coming back into the green. But I would say that unless you see the 24,800 mark is taken out by the Nifty decisively, the seesaw movement is likely to continue. And only when the index crosses, say, 25,100, after that you would get some real bullish strength. Regarding the Bank Nifty, I would say that 50,900 to about 51,100, this 200-point range is very crucial. Once it crosses 51,100, then you can expect further upside on the Bank Nifty as well. Otherwise, this kind of range-bound movement, in some cases you will see weakness, in some cases you will see some buying coming in.
Okay, all right. So that's on the Nifty Bank. But let's get in some queries now. We have Jatin who writes to us from Jatin Shah, who writes to us from Gujarat. He is asking if he can buy Samvardhan Motherson shares at these current levels. So currently it's an investment question that he has. What would you recommend on this, Shahina?
I would suggest that he wait to buy the stock because they have announced that they are going to raise about $1 billion by QIP. And I would suggest that you wait because this funds will be largely utilized to repay the debt. Valuations, are reasonable but not cheap. So it's better to wait till this whole thing is behind you and then to add once the stock stabilizes.
Okay, all right. What about you, Rajat? Do you have a view on Samvardhan Motherson?
I would offer the same view. That is, see, the major move had already happened from, say, around November 2023 when it was 90 rupees a piece. And now it has already doubled and there had been a one-way traffic in the month of May and June. And now it is consolidating. So probably one would get it around, say, 170. That would be a much safer level to buy.
Okay. All right. So that's Samvardhan. That stock has given returns of over 50 odd percent in the past 6 months, doing well. Well, we now have Ashok Khanna who writes to us from Mumbai. He holds 3,500 shares of Hitachi Energy, which he's bought at around 1456. I'm sure there's a little bit of a mistake which has taken place there. I think maybe in any case, we'll get back on that particular stock. But in any case, he wants to know what to do with this particular counter. Well, share price aside and whether somebody's sitting on a profit or a loss there, Hitachi Energy, what would your call be on this one, Rajat? Have you seen it?
Ekta, I saw the question. That is, It was, I think, 3,500 shares bought at a price of 1,500 or something of that kind. In that case, if that is the case, then definitely he should continue to hold on. Although the stock is showing a bit of toppish kind of formation, but unless it falls below the 10,000 mark, there is no real weakness there. And if it is really bought, if it was really bought at say 1,500, if one may book part profits. Otherwise, one should continue with it. Powertrain is the NSE code for this.
Okay, all right. Well, the stock itself is, as you can see, in just the past few months has given returns of over 70-odd%. So it's been a complete rank outperformer. Shahina, any view on this particular counter?
That's a good investment stock. You should continue to hold. They are showing very good numbers. First quarter, their EBITDA was up very strongly. Profit growth is also good. Revenue growth is also good. They are doing pretty well actually after the takeover of the power grid business of ABB. They took it, I think, somewhere 4 years back. So it's a stock that is in a good sector, doing well, good promoter, good management. So it's a hold.
Okay, all right. Well, we now have a query on Nalco. We have Indira who writes to us from Visakhapatnam. She holds 470 shares of Nalco, which she's bought at 178. She's sitting on a loss on this one. Wants to know what to do with this particular counter. Any idea, Rajat, in terms of whether it would, probably show any kind of upside from here on? And do you think that you're confident of it at least getting back to its buy price?
You have put me in a spot. Actually, buy price, going back to buy price is slightly difficult at this point in time because it is showing a distribution pattern. But only hope is that it has not tested in this year the 200-day exponential moving average, which is around, say, 167 or so. So unless that 162, if I'm right, that is 162. If that is not broken decisively, it may not fall much. But then expecting upside, like even if you expect that whether 200 or 210, those levels will be reached anytime soon, very little probability. If I were in her shoes, at least I would have booked part losses and maybe hold the part quantity. That's the kind of thing that one can do. There's not much hope out there in this.
Okay, not much hope out there. You don't even think that it's going to get back to 176, 180, 178 levels in the near term?
178, it might bounce back to those levels because it is trading just at 170 and one can get out of the position that way. But then this is not an investment stock at the moment. This was an investment stock late 2023, early 2024, but not now. Many such PSUs are like that. DEL is another case. But I would say that if one is willing to hold this stock for, say, 1 year or much longer, then probably some good move on the upside can be expected. Short term, very frankly, I feel that it will test its 200-day exponential moving average and it could even go lower if the market turns slightly dicey.
Okay, all right. What would your recommendation be on this particular counter, Shahina? Would you choose this vis-a-vis other metal stocks such as the Vedantas and the Hindalcos of the world?
Well, I do think that it looks interesting at current levels to hold for the medium term. Shorter term, yes, there could be some bit of consolidation. But if you see core aluminium prices, they have actually stabilized. They had come off, over the last 2 months. But if you compare on a Y-to-Y basis, they are relatively stable. So the numbers that the company will report, at least in the near term, the second quarter, third quarter, I think should be pretty good. So, in my view, valuations are not expensive. It's about just 2 times price to book. If you look at an EV by EBITDA, it's about 7 times. So, yes, while metals, PSU stocks are out of favor, I think valuations stand supporting Nalco for the medium to longer term. So, I would suggest you can hold. Do keep a stop loss as usual.
Okay, hold but keep a stop loss at these levels. So that's the word coming in on Nalco. We have Shrikant, who writes to us from Hyderabad, holds 25 shares of Gravita at an average price of 576. Is a long-term investor and wants to know what to do, whether to hold on or what the future prospects of this counter are. Sitting on a very good profit on Gravita. That stock is up around, the profit is around 40,000 rupees. So from that perspective, Shahina, what would your call be on Gravita? Does one hold on, or do you think that it's time to take profits?
That is continuing, so I would keep a strict stop loss, maybe somewhere close to about 2,000, but because valuations are extremely expensive. So for the shorter term, yeah, you can take part in the momentum. It basically, does lead, they process lead, the batteries. So for the shorter term, yeah, maybe it will continue to perform. But if you look at the very, very long term, I will not classify this as an investment stock because lead is being replaced by other, materials in the auto segment. Like you have aluminium, you have plastics. So I would say, for the shorter term, take part in the momentum. For the medium to longer term, it's a switch.
Okay. All right. And what about you? Would you have an opinion on this one, Rajat? Gravita?
I think this investor is making something like 4 times of what he paid for, and it is a parabolic formation on the weekly chart, let alone talk about the monthly chart. Sina is telling that one can wait, but I would say this is one stock, you are getting good money, 4 times the appreciation. Why don't you book profits? If you want some memento, keep, say, a small percentage of stock with you. But otherwise, take your profits. This is the time.
Okay, take your profits. This is the time. That's the word coming in by Rajat on Gravita. Remember that the person who's asked the query is sitting on a very good profit of around 40,000 odd rupees. So let's see whether they do heed that advice. Well, on that note, we need to take a quick break. A lot more queries on the other side. Stay tuned. Welcome back. You're still tuned in to Your Stocks this afternoon. We have Shahina and Rajat to answer all of your queries. Well, let's get in another question now. We have Kumar who writes to us from New Delhi. He holds 2,100 shares of Tata Motors, which he's bought at around 234 odd rupees. He's asking if he can hold it for another 5 years. So he's a long-term investor. Look at the kind of profits he's making on this. It's really a portfolio stock. But the key question, Shahina, is that do you hold on to these gains or do you book profits? Because clearly Anil is a long-term investor. He wants to hold it for another 5 years. Do you think that one should just, forget about it for another 5 years and then revisit it? Or is it time to probably take some profits?
Ekta, I believe it's a portfolio stock and one can continue to hold it for 5 years. The way the management is actually even cleaning up the balance sheet, they're talking of bringing down the debt substantially over the next 1 to 2 years. They are doing pretty well in their new launches. They have very aggressive launches in the EV space. They're doing well in JLR. So, I mean, all across the board, things are looking better for the stock. They have merged the DVR also. So, things are looking better for the stock with the longer term. So, I would suggest the investor can continue to hold.
Okay, what about you, Rajat?
I ditto. I would say that, yes, even I feel that Tata Motors should continue to be held. There is no point getting out of it because even technically speaking, although it is showing weakness on the weekly chart because it has been falling for the last couple of weeks, including the current one, but that is course correction that will continue to happen. But if you ask me for the long-term trend, I would say it is clearly up and it is going to continue. So if I were him, I would have kept my position intact. And yes, maybe 3 years down the road or 5 years down the road, you revisit it. But be certain about one thing. There will be, at some point in time, there could be another sharp fall that can happen. But don't get upset, because this stock will remain bullish unless it breaks down 700. So Tata Motors is a hold, and on dip, it is a fresh buy.
Okay, all right. So Tata Motors is a hold at these levels. That's the word coming in. We now have Jaswinder, who writes to us from Chandigarh, wants to invest in Ola Electric and is asking at what levels he should enter. Well, the management is extremely bullish, in terms of the entire EV cycle, about the kind of market share that they want to get in motorcycles as well. From that perspective, do you think that it's a long-term stock to buy, and would you probably advise buying it at these levels, Shahina?
Yeah, see, I personally also have added some to my portfolio, a small quantity, and I believe that the future is EV for two-wheelers. I'm pretty positive on their plans for introducing their own cells going forward, and three-wheelers also for the longer term. So they are making losses. So this stock is for a longer term investor, somebody who's looking at 1 year plus holding. And I would suggest, you buy it at dips. It could go down lower also. You never know, because for a new issue, sometimes it remains very volatile for the first 1 year. So you have to go through that pain, if at all, and then hold it for the longer term.
Okay. All right. Well, now we have Venkatesh, who writes to us from Andhra Pradesh. He holds 600 shares of Canara Bank, which he's bought at 114. Wants to know what to do with this particular investment. He's sitting on a loss. Rajat, over to you.
I think the loss is not much. It is minimal, and one should seek an exit of Canara Bank, because it has done its course. It has moved up. Now it will consolidate. It will go down. It will take some time, recoup its strength, and then move further up. But before that, if one books some profit, that would be, or minimizes one's loss, that is par for the course as far as Can Bank is concerned.
Okay, all right. That's on Can Bank. And China on Canara Bank, your view?
See, for the shorter term, actually, I will go with Rajat's recommendation that, it may consolidate for some time. But as a long-term investor in Canara Bank, which is like, it's got a very good size in terms of, loan book, in terms of deposit, it is doing reasonably well. It's growing both in loan book as well as in their deposits were about lower double digit. The issue out here is that valuations at 1.2 times price to book is not the cheapest in the PSU banking space. Two is that they are showing some bit of softness in NIMs. We saw it in the first quarter. The cost of raising funds may go up over the near term. So over the next 6 months, I believe it is likely to remain in a similar range for some time. And like all PSUs, especially banking, it is seeing some bit of softness. But if you're a long-term investor and you do not want to trade, then I think you could continue holding.
Okay, all right. Well, on that note, Shahina, as well as Rajat, we're going to let you go. Thanks very much for joining in and giving us your perspective, both on the fundamentals as well as on the technicals. Well, on that note, we'll leave you with some market opinion from Vetri Subramaniam. It's a wrap on the show, but do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell up next.
As a capital market participant, I'm happy that capital formation is well and truly underway, but I don't think this is a one-dimensional, perspective that we should be keeping. There is a massive supply of flow which is coming through from promoters, from new issuances, as well as from, strategic holders, including Ps and VCs. So, every day you're flooded with a new set of either block offers happening in the marketplace, or QIPs, or OFS, or IPOs. So it's a very hectic market, and that's the reality of it. So if you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. In terms of sectors which are attractive, honestly, there's only one sector top down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So though that's the one sector where I have absolute comfort.